Right now, someone is standing at a rental office, watching an agent's face change as a number finishes loading on a screen. At the exact same moment, someone else is being handed the keys to a car, and the loan officer barely looks up from the paperwork before waving them through. Neither of them has explained their income. Neither of them has told their life story. The number already did. 3 digits. 300 to 850. It's called your credit score, and depending where you land on it, it decides almost everything else before you ever open your mouth. Your interest rate, your deposit, your apartment, your car, sometimes even your insurance bill. So, let's follow one person through every level of that number, from the very bottom to the very top, and watch exactly how the world responds differently to the same person, 1 point at a time. Not because they changed, because the number did. Level 1. Below 500. Officially, this is still just poor, the same label as everything up to 579. But down here, at the very bottom of poor, most doors aren't just expensive, they're closed. You go looking for a car because you need one for work, and the dealership doesn't even run your file through the same lenders everyone else gets. You get routed to what the industry quietly calls deep subprime. The national average interest rate at this tier is just over 16%. Not 16% total. 16% a year, every year, on top of a car that's already losing value the moment you drive it off the lot. You go apartment hunting next. The application asks for your score before it asks your name. The agent doesn't say no. She says you'll need a cosigner or a deposit worth 2 or 3 months of rent up front. Money you obviously don't have sitting around, or you wouldn't be at 490 in the first place. The car itself is nothing special. Older, higher miles, priced like it's already broken down once before. But at that interest rate, the interest alone can end up costing you almost as much as the car did, long before the loan is finished. The only credit card you can actually get requires you to hand over your own money first, as collateral, so the bank can lend it back to you. You're not being punished for one bad decision. You're being priced for uncertainty, because from where the algorithm sits, it genuinely cannot tell the difference yet between someone who's about to turn this around and someone who isn't. Level 2, 500 to 579. Still, technically, the exact same poor bracket you just left. But something small has shifted. You're not invisible anymore. Real offers start arriving, actual unsecured cards, not just the secured kind. The limits are small. The fees are not. You get approved for $500, and you feel something you haven't felt in a while. Relief. Then you read the annual fee line, and the relief gets smaller. The car lot changes its tone slightly too. You're no longer automatically routed to the worst tier, just close to it. The system has started telling a slightly different story about you. It just hasn't decided which one yet. Level 3, 580 to 669. FICO calls this fair, and fair is the right word in only one sense. It's fair in the way a locked door is fair. It's not personal, it's a formula. But it's still the tier where lenders quietly price in the most fear. Credit card offers here average close to 27% interest, noticeably higher than the roughly 25% overall market average, because fair is exactly the range where a lender assumes the most could still go wrong. And this is also, almost to the point, the exact band where most landlords draw their real line. Most rental applications start getting approved somewhere between 620 and 650. Cross that number, even by a handful of points, and the cosigner conversation quietly disappears. Nobody tells you where that line sits. You just feel the difference the next time you apply. You start noticing that some applications ask for last month's pay stubs and nothing else, and others ask for a cosigner, a larger deposit, and a reason to trust you. For the same apartment, the same building, the same rent. The gap between those two experiences isn't your income. It's a 3-digit number the leasing office never explains, and you never see them check. Level 4, 670. The door doesn't swing open. It just stops being locked. 670 is where FICO's good tier technically starts, and it shows up in places you wouldn't expect. Your car insurance renewal comes in a little lower than last year, and you almost don't notice because nobody sends a note explaining why. Insurance pricing tends to drop noticeably once you cross into this range. In some states, crossing from the low 600s into the high 600s has been shown to save drivers $50 to $80 a month on the exact same policy. Same car, same driving record, same person. Cheaper because of a number that has nothing to do with how you drive. Credit card offers shift too, down into the low 20% range instead of high 20. You start getting called back the same day instead of the next one. Quick pause. If you're the kind of person who actually wants to understand the systems quietly running your financial life instead of just hoping they work out, stick around because the next few levels are where it gets genuinely strange. Now, back to the ladder. Level 5, 700. This is the number everyone treats like a finish line. And in one sense, you've actually arrived somewhere real. The national average credit score right now is 714, which means you are, statistically, standing exactly where most of the country stands. Normal, average. You go shopping for a mortgage and the quote that comes back at a 700 score sits right around 7%. It feels like a real number, an adult number. What nobody tells you at this level is that average and best available are two completely different conversations, and you're only having the first one. The rate you just got isn't the rate the bank actually wants to give someone. It's the rate it's willing to give someone it hasn't fully made up its mind about yet. You tell a friend your score, expecting a reaction. They just shrug. Because statistically, you told them nothing they didn't already assume. 700 isn't the reward for good habits anymore. It's just what showing up looks like now. Level 6, 740. This is where the story changes, and it changes fast. Cross 740 on a mortgage application, and the average rate lender's quote drops meaningfully below what someone just 20 or 30 points behind you is being offered. A gap worth tens of thousands of dollars over the life of a 30-year loan for the exact same house. Credit card offers shift into an entirely different bracket too. Down from the low 20% range into something closer to 17 to 20. Nobody calls to congratulate you. There's no notification. You just start noticing that the pre-approved envelopes look a little different, and the numbers printed inside them are a little kinder. 740 isn't a nice round number the way 700 is, but it is, quietly, one of only two numbers on this entire ladder that actually rewrites your pricing. Level 7. 760. Here's the part almost nobody tells you, and it's the strangest one on the entire ladder. 760 is the second and last real pricing breakpoint most lenders use. Past this line, the rates barely move again. Not at 780, not at 800, not even all the way to 850. You can keep climbing for another 90 points, and on most mortgages and most credit cards, you will be offered almost exactly the same terms as the person standing at 761. You spent years getting here. Late payments avoided. Balances paid down. Applications you didn't make just to keep your file quiet. And the system's answer, once you cross this specific line, is essentially, that's enough information now. You're not being rewarded for every additional point anymore. You're being filed. Level 8, 800. Officially, exceptional, the top of the entire chart. And here's the twist almost nobody explains, because it's a little deflating. On auto loans specifically, the real top tier, the one lenders call super prime, actually starts at 781, not 800. Someone sitting at 790 is already getting essentially the same rate, just over 4.5%, as someone sitting at a perfect 850. You could spend the next 2 years protecting this score like glass, refusing every new card, checking the app daily. And on almost every loan you'll ever take out, you would get the exact same offer at 800 that you get at 850. The last 50 points don't buy you a better rate. They buy you a number that looks impressive on a screen nobody but you is looking at. The score was never really about you. It was about how confident a stranger could be in about 2 seconds without ever meeting you. And past a certain point, that stranger has already made up their mind. You'll still check the app. You'll still feel something when it ticks up another point. That's not irrational. It's just no longer the thing deciding your interest rate. It became a number you keep for yourself, long after the bank stopped needing it to decide anything new about you. Somewhere, right now, someone is sitting at a kitchen table, filling out that rental application, watching their score load on a landlord's screen. They don't know yet that the exact same number is already quietly deciding their next car, their next credit card, their insurance bill, sometimes even a background check for a job application. And they definitely don't know that 300 and something points higher, on the very same 3-digit scale, a completely different version of this story exists, the one where a bank flies someone out just to ask their opinion on the market. If that sounds familiar, it's because it's the same story we told in the last video about how banks treat you differently at every level of wealth. This is the number that gets built first. Years before your balance is worth a bank's attention, this 3-digit number has already decided how the story starts. You didn't become a different person at any point on this ladder. Your habits mattered. But the number was always doing most of the talking for you in rooms you weren't standing in, to people you'll never meet. And it will keep talking for whoever's standing where you're standing next. Exactly the same way. If you're the kind of person who wants to actually understand the systems quietly deciding your financial life, not just hope they work out in your favor, then you're exactly where you should be. That's the whole point of becoming rich and wealthy. Every week, we break down money, credit, investing, and the financial mechanics most of us were never taught in school. So if that's the journey you're on, subscribe to the channel. There's a lot more worth understanding. But here's the obvious question this whole video just raised. If one number quietly controls this much of your life, what's actually moving it, month to month, without you noticing? For most people, the answer isn't some rare financial disaster. It's sitting in their wallet right now. That's exactly what I broke down in the video right before this one. 12 credit card mistakes quietly keeping you poor. The small, easy-to-miss habits that are quietly working against the exact number we just spent this entire video climbing. Watch that one next, and I'll see you there.